Yes, yes, yes. What's up, traders? Links in the description to my Telegram group to ask questions and talk trading with me and other like-minded traders. I live stream here on YouTube and Kick at Inner Circle Hotshot Monday through Friday for London session at 2 a.m. Eastern Standard Time. Come join me, y'all. This is the same model as my recent videos, the same model I trade live on stream, just new examples to continue to train yours and my eyes. So this happened just last night on September 3rd, around 2 a.m. Eastern Standard Time. So our bias is bearish, and the reason why is because we recently ran out external range liquidity and we had a little market structure shift on the daily time frame. Also on the 4-hour time frame, we had that market structure shift here, and price has been respecting bearish PDAs. So we've been bearish and we are targeting internal range liquidity, which will be this fair value gap here. And next up is this fair value gap here if we continue lower. So step one is to identify your bias. Our bias is bearish and it's going to remain bearish until we get a 4-hour market structure shift bullish to then change our bias. So we remain bearish until then. So going into that, we are anticipating an open high, low, close candle, daily candle to be specific. So what we're going to do is we're going to drop to our 1-hour time frame, step two, and we're going to go to our midnight open. And of course, if your time is not set to New York down here, this is the time that we trade off of. So we're going to midnight, which is going to be 00. This is the true daily open, and the true daily open right here. I will delete this line right here. So this is a correct open, right? So we want to see an open, high, low, and then close off for the day, right? And we want to see an open high into a 1 hour, which is our intermediate time frame. We want to see an open high into either internal range liquidity, a 1-hour FEG, or external range liquidity, a 1-hour high for a turtle soup, right? In this situation, it respected this 1-hour FEG. Okay, now we don't just place any trades. We got to wait for a specific time to hit, and it's going to be 2 a.m. Eastern Standard Time to 5 a.m. Eastern Standard Time is our specific window that we are going to be looking for trades in, okay? So within this window is our trading window right here. I'm going to change the color of this to, let's change it to yellow just so we know. So within this time frame, so once price taps into that 1-hour intermediate time frame, PDA point of interest, we drop to our 5-minute time frame. This is going to be our entry time frame, right? So we got to wait for 2 a.m. right here. It opened and it went higher above our midnight open. It went high, right? Now, what are we looking for? Now, once it's in our 1-hour PDA, our point of interest, we're looking for a 1-hour market structure shift, but not just any market structure shift. We want it to break and close over the most recent 3-candle wick swing low. That's also the most recent intermediate term low, okay? And we want to see it close with a little bit of displacement, also, giving us a little bit of like PDA action. We'll see it right here. So right here, 3-candle wick swing low. And then this 3-candle wick swing low happened. And you can see that it also was an intermediate term low because it rebalanced this FEG right here, and we had a little bit of reaction from it. And instead, this candle closed right below it right here, right? So once this candle closed right below this 3-candle wick swing low right here, this is my intermediate term low. This candle closed below. This was my market structure shifting point right here, okay? And because this is a little movement higher, I would consider this also my mitigation block right here. This would be my mitigation block right here for price to then tap into and respect, right? Reject. So right here, after this candle closed, market structure shifted. It was a nice, decent displacing candle. This is a bigger displacement candle, but it was decent. It didn't create any fair value gaps. The fair value gap was created up here, and you could see that it also respected that fair value gap as well. So you could have also taken entry off of the fair value gap. However, we like to take entry off the first point of interest that gets tapped into. Reason why is because we can't always guarantee that it's going to come into this fair value gap. We have to just take entry based off of what gets tapped into first. And, so that way we can guarantee ourselves that we're getting into the setup, right? So as soon as this blue candle tapped into this mitigation block for me, I will take my entry right here and I will always place my stop loss above the long-term high right here. So it's going to be about an 8 pip stop loss, and I am going to set a solid 1 to 3 R. And you can see that that was hit. Beautiful setup, beautiful approach. Again, the daily bias was bearish. 1 hour, it opened high into a 1 hour internal range liquidity fair value gap. From there, we dropped to the 5 minute, waited for a 5 minute market structure shift, and took entry off of a 5 minute mitigation block. Stop loss went above the long-term high on the 5 minute, targeted a solid 1 to 3 R. Beautiful, perfect. If you have any questions, you can always drop them in the comments below. That's going to do it for the video today. I hope you learned something. Thank you for watching. Please subscribe and like the video. Make sure to check the description. Peace.